Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the weekly time frame with the bullish scenario on the line chart, which gives you slightly different targets compared to a normal candlestick chart. Here we then have a 5-wave impulsive move, 1, 2, 3, 4, eventually a wave 5, new all-time high, and then look for a bigger bear market to start. Now your wave 2 here retraced to the 0.236 Fibonacci taken from the low to the high of this wave 1, which is a rare target for wave 2 has to be said, and this wave 2 is the same amount of time compared to your wave 1, which you can see by checking out this vertical line, the 1-to-1 Fib time taken from the start to the end of your wave 1, which is perfectly fine for a wave 2. Now you can see that wave 3 moved to the 1.618 trend-based Fib extension taken from the start to the end of 1 to the end of wave 2, which is a common target for a wave 3. Now then we have this wave 4, and you can see a big difference between the candlestick chart and the line chart when you look at this wave 4, where is the wick. Now on a line chart, those type of wicks are filtered out. It gives a much cleaner look, and actually it's a lot more relaxed to look at a line chart compared to a candlestick chart. But in this case, your common target for your wave 4, 236 to the 382 is on my chart. The 05 is also still a target. Just to keep the chart clean, I like to keep these two on the chart at the moment. So 56.1k, 48.3k taken from the low to the high of your wave 3. Now you can see that if I would extend this 0.236 to the left, that price has actually hit the 0.236 on the line chart as well. So the target area for your wave 4 is hit. But what is interesting is that on a candlestick chart, of course, we moved to 49k, and on a line chart, we didn't, right? So on the candlestick chart, we actually hit important support, which is the value area high, this blue line here at 49.5k, which is a value area high taken from a volume profile of this range over here. Important support, but on the line chart, you can see we haven't actually even got close to 49.5k. And that is interesting, right? So there's definitely a big difference between the line chart and the candlestick chart on a weekly time frame when we look at this range over here. It's not that one chart has a higher probability than another chart, but it is good to create more context by looking at different charts and then using those different charts to make decisions. Now, after wave 4, we are looking for an impulse to the upside in a wave 5, where at the moment an interesting target is around 100k, but we first have to wait for a wave 4 to actually be finished and get more confirmation of a wave 4 to be finished before we even really start looking at wave 5 targets. Now this, what you see on the chart, is a base channel, and a base channel is taken from the low, the start of a wave 1, to the end here of a wave 2 to the end of a wave 1. We are talking about this scenario over here. Now what you like to see is a wave 3 to move above the base channel and a wave 4 to come back to the base channel, which has happened so far. What we don't like to see for wave 4 though is price to move to the lower trend line of this base channel. It's no problem to be in the upper half over here or touch the midline, maybe even slightly move below, but we don't like to hit the lower trend line. Something to keep in mind, lower trend line at the moment is sitting at a 45k. Interesting, because we do have some additional support at that particular area. Now this is a trend channel which is taken from the end of 1 to the end of 3 to the end of your wave 2. And what you look for with regards to a trend channel is a wave 4 breaking out of this lower trend line. So the moment this lower trend line is broken, it increases the probabilities that the range that you're looking at here is a wave 4 for then an impulse 1, 2, 3, 4, 5, if at least you're looking, of course, at an impulsive structure. The bearish scenario on the weekly time frame on the line chart here is what you see, a WXY. Yes, I can make a flat ABC, but because the target is below 15k, which at the moment is not something to talk about at all. We're at 60k. I prefer keeping a WXY on my chart, which has a higher target, which is the 0.618 here at 31k. It's a trend-based fib extension taken from the start to the end of W to the end of your wave X. And a wave Y can be one of three structures: a zigzag, triangle, or a flat. Now, based on the local price action here, a triangle is very unlikely. So preferably we are looking for a zigzag, a three-wave structure down, or price to take the all-time high and then move down impulsively to 31k. Imagine. Right. Now, if we then go to the daily time frame, then a volume profile on the daily time frame here will show you that we have shortly moved above the value area high of this range over here, but we didn't manage to hold it. We fell back down again with also a beautiful retest, and now we are attempting once more to move above the value area high and stay there. Now, it's of course too early to talk about if it's not gonna, but what you want to see is price closing above the value area high, preferably seeing a retest that is not failing, and then price to change market structure to increase probabilities to move to a point of control at 67k. If we then go to the 4-hour time frame, I will switch back to the candlestick chart, and on the 4-hour time frame here, your quote-unquote bullish scenario is a scenario where you do take 63k. However, in this case, we are still looking for a W, X, and a Y, and then another low towards the downside. It is at the moment too early to talk about more bullish scenarios, really, where we are looking for wave 1 to either a bigger 3 to the upside, 1 to 1 2 big 3, or even a bigger diagonal. It's just too early, and this move to the upside here looks very much like a 3-wave structure compared to it being an impulsive structure. Now, if price moves towards the upside impulsively, well, that's perfectly fine, right? We are looking for price to move up anyway in one of two scenarios. I'll explain the dotted lines in a second, and we can then observe as price moves up what it is going to do with new ranges forming, because a new range will always give you all the information that you need. Now, what you see on the chart here is then WXY, with wave X being a complex structure, a bigger 3-wave complex structure, either already finished, where we now look for ABC, which is the green line up 65.3k would be your target, or a bigger flat, where this is a 3-wave structure. You look for a price to move down. 55k comes to mind. We have some interesting support here at 55k, and then the next level would be 52k, and then move towards the upside for your wave Y. At the moment, this has the highest probability. Now, it is very difficult to know exactly what scenario here is the highest probability scenario, right? So yes, probabilities are higher to still move up, and I also recommend that once you get into complex structures like here, I think it's pretty much a waste of time to eventually try and count this in a lot of detail. In the beginning, of course, we counted in a lot of detail, but once you get more information, it starts to become more and more complex. 3-wavy structures all over the board. It starts to be more interesting to zoom out instead of being so involved on very, very low time frames. And what you actually then want to focus on is this structure here corrective or impulsive? And that is something that in the past 1.5 weeks we have covered on this channel all the time, because each time we analyzed this range over here, the probabilities were lower for very bearish scenarios, right? Because the impulsive structures to the downside never really worked. They were always lower probabilities compared to this being a corrective structure, and for price to still move towards the upside looking for a wave Y, which at the moment remains the higher probability scenario. Now the question is, do you do this or do you then do this? I don't care, right? It's just that in general, from a trading perspective, probabilities are higher. This is corrective, not impulsive to the downside. The fact that this corrective increases probabilities to take 63k. That is your directional bias. And then based on other tools, other confluences, your own plan, you can try to figure out a nice entry and profit from your own strategy. Now, your bearish scenario at the moment, pretty much the only one that's left, would be this. A WXY, zigzag in W, zigzag in a wave X, triangle in a wave Y. Yes, your wave Y did not reach the generally minimum target for a wave Y at about like 64K, but structure in that case would be more important compared to reaching that target, and a wave Y does not need to take the high of a wave W in a sideways WXY. So it's valid till it's not. Invalidation is the high here, invalidation is the low here. Very easy. 61.8, 56.1K are the two areas to look for. And of course, after C, you look for a rejection in D, which means we need to see local signs of weakness. Now, for that triangle, your bearish scenario, and also by the way for the flat, so for the triangle you want this to be a three-wave structure to then move down. And also when we look for a flat structure, which is the yellow line here, where you look for a 3 and then another move down before continuation, right? You want this to be a three-wave structure. WXY, ABC, it really doesn't matter, right? It's just a three-wave structure. Now, in this particular case, price has hit resistance. The daily naked point of control is 61,350, acting as resistance here at the moment. We also got quite close to the target for a wave Y over here, for then the potential of a W three-waver in X, a flat structure, and another three-waver in a wave Y. Now, if we would be looking for price to move back towards the downside, we have to observe the reaction here. We have to observe the range. We only have a little rejection, didn't change market structure yet, right? What I want to see is a bigger rejection, price moving down on a 50-minute time frame with consistent bearish CVDs. Also price to enter this gap, not just test the high of the gap, generally acts as support for the first time. You want candles to close in the middle of the gap, increasing probabilities to fill this gap to the downside, and that step by step increases probabilities to then eventually move down. Right now, your more arguably bullish scenario would be for price to simply pass this resistance, and then the next area of resistance is 63.1K. So quite simply, on the 1 hour time frame, we observe the range here. If you can pass the daily naked point of control, preferably a nice retest, we build a range here with consistent bullish CVDs, right? We flip this level, probabilities are high to move to 63.1K, which by the way also finally means we take out that damn high. So you also see the 1.236 on my chart here is in confluence with the daily naked point of control. This is still a target for a wave C as well, so something to keep in mind. Looking at the CVD divergences, then we have bullish CVDs here, higher low in price, lower low on the CVD. Target would be 63K. Locally, the bullish CVDs played out here, higher low on price, lower low CVD. You can see the green line, you can see the checks over here, the check boxes inside the green line. Very, very nice. Yesterday, I explained why this bearish CVD had no interest to me, right? And it proved, well, true. Very, very nice. I mentioned what we are looking for these bearish CVDs to increase in probabilities is price to change market structure with bearish CVDs. We didn't get it, right? Instead, what I also mentioned is as long as price is moving up with bullish CVDs, we are looking up. More bullish CVDs here. Price shoots to the upside, hits the resistance. You know, what's there to be said? Very, very, very nice. So when we then look at the probabilities, then on the weekly time frame, the probabilities remain higher at the moment for the bulls compared to the bears. On the 4 hour time frame, however, the probabilities are higher for the bears to sooner or later still take out this low. Reason is that at the moment, probabilities here arguably would be higher for a WXY. There's always the potential for a bigger diagonal, 1, 2, 3, 4, 5, which would be bullish. It's just too early to call. And if we do move towards the upside impulsively, probabilities change. But at the moment, on a 4 hour time frame, the fact this looks more like a three-wave structure. Arguably, probabilities are higher to take the low. On a 1 hour time frame, however, the probabilities are higher to take 63K first. And this is how the probabilities on a 4 hour time frame can change. Because if you take 63K and you do so with an impulsive move, right, then we just observe the next range. And if the next range is corrective, we again look for price to move towards the upside, right? So yes, for our probabilities, bearish, looking for a WXY, but on the 1 hour time frame, we are looking for still price to take out this high. And when it does, we just observe local reactions, right? And also we are aware of the potential flat. On the number 2, we then have take 49k first. And on the 15-minute time frame, just very locally over here, right? Observe the reaction at resistance, the daily naked point of control, wait for a range to form, observe the CVD, something I always like to do. And if price can pass the current daily naked point of control here and flip it, the probabilities increase to move to the next one, which is at 63.1k. Let's just hope, for the sake of our Elliott wave brain and mental state, that very soon we get out of this range, because we have been here for a long time now and we have counted it in a lot of detail, but by now it doesn't really make sense anymore to do all this stuff in a lot of detail, and it starts to be more and more important to zoom out and wait for some sort of a breakout or clarity to come. It is still interesting to look at the final three-wave structure to the upside and the resistance we have here, but you will not often see me analyze this structure of the chart anymore, because it really does not make sense. It's pretty much a waste of time. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.